Have you ever heard of the bucket shops of early Wall Street? These were places where ordinary people thought they were buying and selling real stocks. But in truth, it was all just a bet, a wager on whether prices went up or down. No real shares, no ownership, just paper promises. Sound familiar? Because today, the same kind of game might be happening on a much bigger stage. In the global gold and silver markets, run by the London Bullion Market Association, or LBMA. In the late 1800s and early 1900s, bucket shops popped up all over America. They looked like brokerage houses with tickers, chalkboards, and eager investors placing trades. But here's the trick. When you bought a share of stock in a bucket shop, you didn't actually own anything. Your trade went into a bucket, literally, where the shopkeeper recorded your bet. If the stock price went your way, they paid you from their own pocket. If it went against you, they kept your money. It was gambling dressed up as investing. And because the shops weren't connected to any real exchange, there was no stock ever changing hands, just side bets on price movements. The bucket shop's business model was simple. The house was your counterparty. That means every time you won, they lost. So naturally, they made sure most people lost. They'd manipulate quotes, delay prices, even nudge trade just enough to trigger losses. By the early 1900s, it became clear. Bucket shops were a parasite on the financial system. In 1909, the Bucket Shop Act made them illegal, but the idea didn't die. It simply evolved and found a new home in the global derivatives markets. Fast forward a century. Today, the London Bullion Market Association is the heart of global gold and silver trading. Every major bank, JP Morgan, HSBC, UBS, trades there. But here's the catch. Just like the bucket shops of old, most of the trades never involve any real metal. They're unallocated contracts, paper claims to gold and silver that might exist somewhere in a vault or might not. These contracts are traded, leveraged, and settled, but almost never delivered. For every ounce of physical metal, there could be dozens, even hundreds of paper claims stacked on top of it. So when you hear that the LBMA trades hundreds of millions of ounces of gold every day, don't imagine truckloads of bullion moving across London. Most of it is digital bookkeeping, bets on whether prices rise or fall. In that sense, it's not so different from those old bucket shops. Back then they bet on stocks. Now it's gold and silver, the very things people turn to when they don't trust paper. Ironically, even gold has become paper. Collapsed when customers demanded real stock certificates. The LBMA could face a crisis if investors suddenly demanded real metal. That's called a delivery squeeze. Imagine thousands of traders asking for physical gold, but only a fraction of that gold actually exists to deliver. The result: spot prices skyrocket, premiums explode, and the paper price system breaks down. It's not a theory. We've seen glimpses of it before. In March 2020, during the COVID panic, physical gold traded nearly $70 higher than paper prices in London. That's what happens when trust slips, even for a moment. The LBMA system is efficient until it isn't. It keeps liquidity high and prices stable, but it's built on the same foundation as the old bucket shops: confidence. As long as people believe the paper represents real metal, the system works. But the moment too many people doubt that promise, the paper game unravels. And when that happens, gold and silver prices could reprice dramatically higher, reflecting their real physical scarcity rather than a leveraged illusion. If the old bucket shops were outlawed for betting on fake stocks, what do we call a system where trillions of dollars of fake gold are traded every year? The truth is, the LBMA might be the most sophisticated bucket shop in history, a legalized paper casino where confidence is the only collateral. And history tells us leverage works perfectly until the moment it doesn't. The bucket shops of old are gone, but their spirit lives on in the markets we still trust today. So if gold and silver ever break free from their paper chains, don't be surprised when prices jump to where they were always meant to be. Because in the end, the house only wins until the customers call for delivery. Like, subscribe, and let me know in the comments. Do you think gold and silver are being suppressed by paper markets? Or is it all just business as usual?